And cheers to everyone who's tuning in. As you guys know, it's another Tuesday. So you already know we bring the heat with somebody in the real estate game live. And today I'm super pumped because we haven't been doing a lot of in studio interviews. So I have someone local, which I love. The in studio is always better. But today we have Whitney Ricci, and we're here to talk about this sexy topic right now: insurance versus Florida.
I like how you frame it like it's a WWE SmackDown
Yes,
wrestling fight.
it is.
It does feel combative, though. It's not inaccurate.
Correct. And I feel like a lot of investors right now, not just investors, homeowners, everyone, are kind of like, we're at a battle, right? And so with that being said, Whitney, thank you so much for doing this.
Offering myself up to be beat up in the comment section.
Yes. So why are you doing this to us?
Because I'm a masochist. And
before we get into it, Whitney, if you wouldn't mind explaining a little bit about yourself, your company, how long you guys been in the game, all the services that you guys offer, and then we'll go from there.
Great. So thank you. Thank you for having me. Hello, everybody. Hello to my family that's watching, Shirley. So yes, my name is Whitney Ricci. Ricci Insurance Group is my company. I've been almost 16 years in the insurance industry, and we're going to celebrate 9 years of owning the agency this month.
Wow.
Prior to that, thank you. Prior to that, I got my start at a big captive agency where we sold one insurance company, and I got a lot of great training there. But really, when I looked at my business model, I wanted to have a little bit more or a lot more ownership of what we could sell, what we could offer, how we could serve clients. I decided I wanted to broker. Just insurance is not a one size fits all. So opened an independent agency, and we focus on homeowners, auto insurance, business owners insurance, all lines of business owners insurance, and life insurance. Pretty much everything except for health. We don't mess with health insurance. So our best clients are business owners who appreciate the fact that we can also do their personal lines, their regular home and auto. And we don't have the, only $1 million and up limits like some of our competitors do that do the level of commercial insurance that we do.
Right. That's awesome. And I feel like, correct me if I'm wrong, but anytime I talk to anybody locally, you're doing insurance with a lot of the major players in town.
Yeah, we're busy. We're busy. We're very, very fortunate that we built our whole book of business based on referrals.
Yep.
And we're just now in the phase where, we're getting calls just from reputation, from, name recognition. They'll see me on this, or they'll see our Google reviews, or they'll see, on Yelp or something like that. And that's really nice. But it's, we work really, really, really hard, and we are constantly fine tuning our business model to serve clients. And we do more than just the bare minimum of shop your policy around. Scarlett, stop. My daughter is over here in the background doing a flyover. We do more than just the bare minimum of, yes, we can shop your policy around with all the carriers that we're appointed with. In addition to that, especially over the last couple of years, I spent a lot of time doing this type of education, doing a lot of client advocacy, schlepping over to Tallahassee to talk about this stuff.
Yeah.
Because if I'm not doing this for my policyholders, who is going to do it?
Correct.
Who's going to go talk about insurance to the decision makers who can actually change a broken system?
Yeah. So before we get into the whole insurance, craze right now, right? For investors who are listening and, have questions about insurance or aren't really familiar with when do you need to get insurance? Some people are just there's flippers that are watching. That's a different insurance. Long-term tenants. That's a different insurance. Now we had that crazy Airbnb wave, right? So Airbnb insurance, that's a different insurance. Now there's like that pad split model going around. So what are the differences, I guess, in all those types of insurance? Is there a difference? Obviously you service most of them, right? So, let's get into that.
I mean, the main thing when you're talking, like you need to have a relationship with your agency, like who you're going to work. You need to explain your business to them, and you need to be very transparent about this is the risk exposure that is there, because they need to set up a legal policy contract that's accurate. So when you have a claims adjuster can look at it and it's written correctly, and they can look for how can they pay. So things like what is actually going on with the property is important. Right. If you say I have an annual tenant there and you're doing nightly rentals on Airbnb and you have a claim, that carrier is going to deny your claim if it has anything to do with that exposure, and you did materially misrepresent yourself in order to get that insurance. You weren't eligible for it. So answer those questions correctly. Your agent should filter you through and put you with a policy that you're going to be, appropriately covered. Gotcha. But they are different policy forms: owner occupancy, tenant occupancy, and the rental term. All of that does matter. Vacancy is a big thing, especially if there's a vacancy longer than 30, 60, or 90, depending on the policy contract days. There are limitations that kick in with just about every policy if they've been vacant for that long a period of time. Gotcha.
Okay. And so when do you normally step in? Like, when does an investor call you guys?
As soon as possible. As soon as possible. And I mean, really, to give as much of a runway as possible, you're going to set yourself up to be successful. Sometimes there are going to be repairs that are going to need to be made in order to get the insurance. Right. And if you have that conversation about insurance earlier, you have a little bit more leverage. Maybe the seller can take care of some of those things. Gotcha. If it's right before closing, you want to do that deal, usually you can get some type of insurance contingent upon, but you're going to have to pay. Right. And those policies usually come with a minimum earned. A minimum earned is like a period that you have to pay no matter how long you, Mm-hmm. And usually that's about 3 months. So that can be pretty painful if you had gotten the quotes 30 days in advance.
And
you could have avoided it.
I'm sure you, I don't know if whenever we're trying to get insurance with you guys, I don't know if it's you, it's probably not you, but we're always those last minute people who are like, damn, insurance is going to be like freaking $2,000 for 3 months. All right, well, closing's tomorrow and we forgot to initiate insurance. The good thing is there is always an option.
There's always an option. Sometimes you got to pay, and I'm gonna hit you with a truth bomb here. I'm known to be transparent to the point of being tacky, and I've told some investors straight, they're like, I don't understand. I've called around 6 insurance agencies and nobody will call me back to insure my flip. That is because we have to pay back our commission when you cancel that. Right, so why are we taking time away from other more profitable lines of business? Same like you don't drive all the way to McClenny to buy paint for your house. That doesn't make sense. So we've really reduced the amount of those single flip policies that we're writing at all. Gotcha. We'll make accommodations for existing clients if we have other lines of business. If it fits with a carrier where we're a diamond agency with them, we'll offer them, and that can be like a great win-win. But generally speaking, we're not going to be a good fit for investors that are doing less than 5 deals a month. Got it. We have a great option on a big master policy. That's one of our most popular, most referred things, but you got to be doing volume in order to qualify for
that
it.
Makes sense.
And if you are somebody that's doing onesie twosies, be very nice to your insurance agent. Yes. Give them all of your business, because it is a little bit of a power shift. Most of the time, the client, the policyholder, you think of, I'm the customer, but really on those policies, they're not profitable for your agent in most cases. Right. So they're doing it almost like a favor. Yeah. And people don't realize that at all. They're like, I don't understand. Does nobody want to make money on this? And that's the reason why. So I apologize. I'll probably get it in the comments. Somebody is probably going to say, we've called and they said, no, they won't help us for our insurance park. Well, get to 5. Get to 5, true. Grow, and we'll knock it out of the park for you.
If you want to work with the best, right?
Sorry.
No, that's awesome. That's awesome. So as far as what is going on with insurance.
Yes.
Right.
We're in the total upside down.
It's become a huge thing.
Yes.
To where DeSantis is trying to force insurance companies to do things here in Florida, right? Mm-hmm. Something like that.
It's a lot of back and forth. There's been a big, so how much time do you have? I can take it all the way back. If you could do a full history. I mean, I can, the short version, and if people want to stay, I can go into the longer version. The shortened version is we got into the situation because we have a couple of court cases in the state of Florida that were well intended, but had a terrible unintended consequence by setting a precedent that made it easy and lucrative to sue insurance companies in the state of Florida for things that are not supposed to be covered by insurance and win, and have a fee multiplier of excessive litigation fees. So that's why you hear these stats, they're thrown around. We had an emergency session that the governor called after we had carrier after carrier after carrier going from A-rated to bankrupt.
Yep.
Just like in any business, if you didn't take in the revenue to pay for this overhead and you have these skyrocketing expenses, you go out of business. Insurance companies are no different. So the stat is that we have 9% of the claims nationwide and nearly 80% of the litigation.
Oh.
That is insane. That is insane. And we are the ones that pay that. So I always want to make a big deal about, I feel strongly that we are in a claims paying business. We sell peace of mind. We want to get people back to a pre-loss condition. The vast majority of the claims experience, we call people in my agency, the vast majority of them, not all, but the vast majority of them have a very positive experience when they need to use their insurance.
Got it.
Unfortunately, if an insurance company is paying claims that are gray or they're overpaying or they shouldn't be paying, all that means is the thousands of other policyholders that I have that aren't filing claims. This is why they're having these unprecedented, painful rate increases.
Gotcha.
So I do not want the insurance company to pay a single dollar more than they owe. Every dollar that they owe, 100%, but no more, because all that means is that somebody else is paying for someone else taking an unfair share of the pie.
Right. And so, because there was this big wave of public adjusters.
Oh yeah,
going ham.
Oh yeah,
it's like, oh, look at that.
It's a perfect.
Oh, let's do an insurance claim.
It is a perfect storm. You have everybody at home during COVID, and entire neighborhoods that were built at the same time with all of their roofs aging out. And even if your policy contract says wear and tear is excluded from your policy, if you see that neighbor, and that neighbor got a free roof from insurance for you, even if, we're talking good people, well-meaning people who are like, those data points tell me that this should be covered by insurance. I feel entitled to this. Yeah. And that's why you see some of the stuff in these bills about how big does the font need to be where we include the definition of insurance fraud. Because it's that big of a thing. There's a huge misunderstanding. And then the part that's even more painful is as we have these rate increases, people are like, well, now that my rate is so high, I feel even more entitled to it.
What am I paying for?
Yeah, right. But the roof thing is the root of this. The roof plus the litigation thing is a bigger problem over the last several years than, and I don't want this to be the thing that I'm quoted on. Hurricane Ian was a tragedy. It was the most expensive storm to hit Florida, even compared to Hurricane Andrew, accounted for inflation. It was a ton of damage that was done by that storm. That is a legitimate, real weather risk that we face in Florida. But the litigation risk that we had been facing for years before that, just huge.
So back to that stat, right, where you said 9%
of the claims
are in Florida, nationwide, but 80% of the litigation is in Florida. So what
because
that means
of those two court cases,
right? So what that means is we have more people fighting insurance companies in Florida.
In theory, but most of them don't even know. So when you say fighting, like that assumes that there was ever like a conversation even to have the dispute. When we have this system that's set up and they're like, oh, and you read about it in Nextdoor and I'm just like, oh my God. But they got the system down where they're like, oh, this roofer knows how to do it. And the roofer, you sign this assignment of benefits, which you can't do anymore. That's a great thing that they've fixed, part of a broken system. There've been a lot of positive things that are course correcting us to go in a better direction. But the reality was, sign here, assignment of benefits. They file the attorney and send it off, and the policyholder doesn't even know. They're just automatically putting them through this whole thing. So to say that they're fighting the insurance company isn't even fair, because in many of the cases, the insurance company didn't even get a chance to do anything before they hired an attorney.
Right.
So there are a couple bills over the last couple of years have passed. So the first one required a policyholder to file an intent to litigate before they actually hired the attorney. So that helped a little bit because it gave, you hear these stories about how, oh, well, then they settled before we went to court. It gives them that kind of last chance thing sooner. That was a little bit helpful. The biggest thing, which was the bill that was passed, the governor signed it an hour after it passed through the state legislature. And oh, by the way, there were almost 100,000 lawsuits filed that week. About a quarter of them from a single law firm who is someone and someone who will, I'll tell you after I drink half more of this beer, I'll tell you exactly who it is. They're at the top of my shit list. I'll tell you exactly who they are.
It's always someone and someone.
Oh, it's someone
Something
and someone.
something.
It's someone and someone. It's someone and someone. All right. Anyway, but this tidal wave of lawsuits that came through in anticipation of this. But the big thing that they're calling it world-changing tort reform that just passed is either used to be that if there was a claim, there was a dispute, you say, insurance company, I think that this claim should have been $100,000. Insurance company says, dude, you're only missing 10 shingles. We think it should be $1,000. You go to court and the court says, all right, you should pay $15,000 for that. Well, then they turn over $100,000 worth of legal fees. So that money is going, we policyholders are still paying it, but it's going to the attorneys.
Right.
So now they did away with the one-way attorney fees.
They're technically winning. In that case, right.
Mm-hmm. Okay. And the losing party would have to pay for for both attorneys. Gotcha. So that's done away with. So we're very optimistic that this is going to do away with a lot of the frivolous lawsuits.
Gotcha.
Because if your legal fees are going to come out of my roof settlement, is that really a good deal for me?
Right.
Then I still have to come up with all of this money to actually pay the roof.
Right.
So we're also getting some changes in policy contract language where policyholders are being offered an actual cash value settlement on their roof, which I am a fan of. I'm the fan of options. Understand the option, take it if it's for you, pass if it's not. But what I see is your roof is 15 years old. Other companies are saying, no, thanks, we're not insuring roofs over 10 years or 7 years or 2 years, ridiculous in some cases. But if a carrier is like, I'll take your 15-year-old roof, but only with actual cash value, my clients are like, yes, please. Thank you for not making me have to prematurely pay to replace this roof now.
Right. So what does that mean? What does that mean?
Depreciation would be applied to it. So for easy math, if you've got a roof that you expect is going to last 20 years, it's 10 years old, roughly half of that would be taken off of the payout.
Got it. Okay. Oh, that makes sense.
Yeah. I mean, and when you think about that's how your car works.
Yep.
You get the actual cash value for what your car is worth at that time.
Gotcha. Okay.
So, and I mean, I think that's going to get, because we got to turn off the faucet. We have to make the reward not so tempting to where people are like, of course I'm going to do that. Of course, basically the roof needs to not be free.
Right. Right. No, that makes sense. So basically, I'm kind of understanding. So we had a ton of people, not necessarily, I mean, I guess kind of take advantage of the system.
Oh, that's exactly
way, right.
No, and a lot of them were well-meaning. They didn't know.
Right.
So, and I want to be clear about that. I don't want to be like, oh, I'm hating on everybody, because I probably am personal friends with 50 people, who did this. Yep. And, many of them didn't understand. Others of them are like, look, if the system is broken, I'm going to play the system to what benefits me at this time, fix the system and come back, and they understand. They know why we're in this. Some of them feel very badly and had no idea that that's what they were doing. But at the end of the day, yes, that's what happened. We had some loopholes. They've been exploited. I use the story. Have you heard the Cobra effect?
No.
So the Cobra effect is taught a lot in business school. It's about when you have a well-intended measure that you take and it has an unintended consequence. And it goes back to this little anecdotal story from back when India was under British rule and they had a cobra problem. And cobras everywhere, freaking people out, scaring people. And so to try and get rid of these cobras, they said, bring us the dead cobra and we'll give you a bounty. We'll give you a cash reward. And it was working. It was getting rid of the cobras, until people started farming cobras in order to get the bounty. So that's what we've had here. We had these court cases that were well-intended. One of them had to do with concurrent cause of loss. It was a gentleman down in Naples, Florida. It's the SIBO case if you want to read more about it or stay after, and I'll be glad to tell you the whole long story. But his house was built poorly and it leaked when it rained. So then a hurricane came through. So did it leak because of the hurricane or did it leak because the builders built it poorly? He sued everybody. And after going back and forth, they said, pay the man. Like hold that big
Right.
bad insurance company responsible and have them pay the Florida homeowner. That was a custom home in Naples, though, not the most sympathetic.
Yes.
He's probably going to like see this at some point, and him and so and so and so and so the law firm. I'm going to have all these people coming at me, but anyway, well intended. I mean, they initially they said no, they shouldn't have paid. It's not covered in the contract. Then it went on appeal, and then it went on appeal. End of the day, they paid him. Set this precedent that now, when two things happen at roughly the same time, one covered by insurance, one not covered by insurance, even if it's not covered by policy contract, the precedent from the SIBO case has resulted in this roof thing. So your roof is old. Your roof is old. That's not covered by insurance. But I mean, this is Florida. You're going to have like a tile or some little bit of wind damage. And they're going to hold it to the SIBO standard. And that's, And then there's another case, the Joyce case, that was a local couple, short version. It was complicated enough of a case that the attorney applied a fee multiplier, which is multiples of their typical hourly rate, and went back and forth. And again, the spirit was she did work really hard, pay the lady against big bad insurance company. And now, because they paid for that one, they have this precedent that attorneys suing insurance companies can charge multiples of their normal hourly rate, which you and I and all of us pay. Yeah. So we call it the tort tax in the industry. It's the hidden tort tax of why our premiums are higher than any other state, because we have this litigation problem in addition to a legitimate, real hurricane problem.
Yeah. And so while all these lawsuits and everything and all these public adjusters were taking all this money from insurance, after a couple of years, insurance companies are like, hey, we're going bankrupt. We're shutting down. We're pulling out of Florida because this is only happening in freaking Florida. So we're pulling out. So the ones that are sticking around are like, hey, insurance was $800. Now it's $3,600, right? Or whatever. And so that's kind of,
that's exactly
now it's bringing awareness, because everybody's like, hey, I'm getting a new policy and my policy was $900. And now you're trying to say I need to be $3,600. Like, what's going on?
Yes, that's exactly what's going on.
Got it.
And throw in on top of that, policy, new business underwriting is more strict. So maybe when you got your policy, your roof was 12 years old. It was no big deal. Well, 5 years have gone by.
Right.
Your roof is 17 years old. You can't even really shop.
Yeah.
You just have to, and that people don't realize that they track a lot of these stats about how many, what the rate increases are that people have. What is not included in those rate increases, because that, the rates are filed with the state, so they can pull that data. What data they can't pull are the hundreds of thousands of Floridians last year that lost their coverage because their carrier went out of business, and those people had to get replacement insurance. And I can tell you, in many cases, it was double, triple, 4 times the premium that they were paying before. And all that data is not being collected. So it's quite a bit worse, the rate increases.
Gotcha.
Yeah. Now I do want to talk about some positive stuff, because this recent legislation is, again, world changing. It was a huge deal that we got this through. And so it has given some glimmer of, the time right now. Farmers has announced they're leaving. They're going to cancel another 100,000 policies. AAA came out. They've got some more cancellations that they've got, which is stuff about our governor trying to force come,
Yes.
But if we can get through this hurricane season and we can get some more traction with some of these, we have now, mandatory arbitration agreements that clients can opt into and receive a discount for, that says, hey, I'm not going to sue you. I just want to be treated fairly. I think I can get a fair outcome if we go to binding arbitration. I'll take a discount
I have
for that.
to sign those whenever we get insurance now. And
and they're usually optional. You don't have
I know
to do
the stories,
it,
right? And it's like, hey, you can get it at this rate, but you got to sign this form that says you're not going to sue them.
Right.
Yeah. Okay.
But think about it, because the risk is litigation. So it's really not much different than when you get a policy without wind.
Right.
If you're not going to file a hurricane claim, then you pay a lower premium. If you're not going to have a litigation risk exposure, then you do deserve a lower premium. It's something that they actuarially calculate for now.
And I have to waive I have the option for terrorist insurance.
Yeah, that's you on the commercial side. Yeah.
I always love when there's like, should I get terrorist? Where are we at?
Depends on what the cost is. Sometimes it's not that much.
Yeah.
Sometimes it's not that much.
You never know.
You never know. That's one that I'm like, oh, please, no. Because the vast majority of our clients,
because that has been coming up. Because we'll get shopped down. It's like, hey, you get this one that you have to do the 3 months minimum, or you can do this one, but you have to sign that you're not going to litigate. Okay. So that is helping some insurance be a little
what
bit
we
cheaper.
need, and it helps with premiums, but the big thing is it helps with the carriers feeling comfortable doing business in Florida. Because at the end of the day, competition is what we need to drive prices down.
Correct.
Right now, we have no
Last
competition.
thing we need is one person, one insurance company out there getting to call the prices on everything.
I mean, and cherry pick and just take the very best risks. And it's a tough thing, because if you had an insurance company, what would you do? Right now it's not real attractive. So the good news is, this change is like enough that it will change the dynamic of our system. We just need to get through it to show. So the reinsurance companies, how insurance companies are structured, each insurance company has at least $30 million that they have liquid, and then they buy multiple layers of reinsurance for if we have over this amount of damage, we use our own insurance. And they buy that from Warren Buffett, and there's a whole Lloyd's in Bermuda and all these. So the reinsurance companies are like, okay, Florida, we've seen 7 years of billion-dollar losses in your industry. We are losing our hats. We're very glad that you got this legislation passed. We agree. We think that this is going to be good, but show us. Show us. Right. So the most, look at this guy. All right. The most recent stats, they say these things usually take 18 to 24 months. So, I blink, it's already been half a year.
I know. Crazy.
So, we think of it in terms of renewals. That's like 2 renewals.
Gotcha. So that makes sense.
We pull renewal lists.
That makes sense.
It's got to like work its way through, and we got to get through all these last minute lawsuits that came in. We are still, there has been an influx with, my theory is, the increased utilization of AI, but in just the quantity of lawsuits that are being filed against our clients, and they have to respond to those. There's no way around that right now. I do think that that's where the next disruption is going to come from. I think that I'm hoping that there's going to be a big tech play in claims handling software. So somebody out there that's entrepreneurial, look into that. Okay. There are some things out there, but I just read an article this week that it's still like 90% of claims are still being handled over email.
Right.
So that means like I read it, I don't know, you read it, come on. Like we got, we got to be able to like check boxes and have things automate and go to different departments. And I think we can do better. And I'm optimistic that we will. And I think that will cut down on overhead. And I think that, there's good stuff to come. Just these things take a while.
Yeah. Yeah. Mm-hmm. And so right now, what would you say is the biggest, I guess, to the consumer, right? Whether it's the homeowner or the investor who's, like, what is the biggest like shock? Is it just the increase of the rate?
It is. Okay. Yeah. And it's, we had a team meeting with my agency's support department today, and they're like, the only complaints we're getting are about rates.
Right.
Like that's it. There's claims are going well. Customer service on the office is going, people are getting all their calls back. We have everything on a ticket system now. So we're able to monitor that real well, 5 stars all around, but it's painful, the rate increases.
Right.
So what people can do, there are some things that are going to be coming out. We can post in the comments later, the My Safe Florida Home program that may provide some relief for discounts and making your home a little My Safe Florida Home. There's a new company that some of our clients have been working with on adding hurricane clips after original construction, which it could be $1,000 or $2,000 to do depending on the size of the house. But if it saves you $800 a year on your, or in some cases $2,000-$3,000, depending on what your starting point is on your insurance, that might be something that makes sense.
What is that? What's a hurricane?
So think like the 3 little pigs, like the you huff and the puff and the wind blow, like things that are going to make your, specifically the clips, go around the, like the joists in your roof and make you put like 3 nails and it's a metal clip that like holds the roof on your house. So it's part of the new building code. All homes built after the 2001 building code have them automatically. Older homes don't. Gotcha. In Northeast Florida, almost all homes built in the 90s do have them, but you have to get a wind mitigation inspection to prove it.
Gotcha.
So we do a really good job on my team of quoting based on what we're familiar with in the area. We'll pull the neighbor's house and and we're like, this is what we think you're going to get. Pay the $100 or whatever to get the wind mitigation inspection. Right. And lately, if the premium's over $3,000 or $4,000, we might quote, if you want to get the full blown aftermarket construction and get them added, this is what you would save.
Gotcha.
And if it's your primary home and you're going to be there
Yeah.
for years, that can make sense. For an investor that's going to flip, probably not.
Right. That makes sense. That makes sense. And so as far as investors, right, like right now, one of the biggest things is like, hey, I can no longer get insurance for a 15-year roof, right? Or whatever. Like what are you seeing are some of the more drastic changes?
Yeah.
As far as, let's pretend they're an investor doing five plus, right, a month.
No, I know. Yeah.
And so what would an investor who's, in the game?
Yeah. I mean, and we can still talk about somebody that's doing one.
Yeah.
I mean, when they're looking at their deal eval, number one, they need to increase what they're planning to spend on their own insurance. It's just going to be more.
That's easy.
That part.
Okay.
The second part of it is they need to be aware of the challenges that their end buyer, if they're flipping the home, is going to face.
That's what I want to get into.
Yes.
Perfect.
So those things, roof age is going to be a big one, and they need to go into this. And this is where, like, if you have a good relationship with your insurance agent, and you do enough business with them and you're loyal to them and you have a two-way, relationship. We do have some clients that they're like, hey, can you help? Would you mind quoting this in advance? We're going to refer you the buyer. And if it's somebody that sends us people regularly, we're going to do that for them. Right. And we'll have that quote teed up, already approved by an underwriter. Sometimes it's with an exception. And look, you can't get an exception for everything, but for the right client, when it makes sense, that's going to be, so age of roof is going to be a big thing.
And what is that? What is that age of roof?
Well, it's because you got to look at the whole thing. I mean, I know it's crazy. Right. I know. And listen, I want to acknowledge if it seems like the carriers are batshit crazy, it is correct. Right. They are. It's because they are looking for reasons to not write a home. They're not looking for reasons. We're salespeople. We want to make a deal.
Of course.
Yeah, we're trying to make it rain. They're trying to rain on our parade. So like that is exactly their intentions. We need,
But when does an investor right now, and this rule doesn't have to apply every time, but majority of the time, I'm analyzing a deal. The roof is 13 years old. Should I budget for doing a new roof?
13 years old, I would not.
Okay.
I would be prepared for you getting pushback on a buyer.
Got it.
And what we'll see in those circumstances, maybe you do a closing credit. Maybe you put money in escrow. I would be prepared for anything over 10 being a challenge, but it does feel
10 being a challenge.
Yeah. Okay, but I really don't want to be saying it. Yeah. But I mean, if I'm the flipper and I'm not,
and put yourself in the shoes of a conservative investor, right? Like, I want to make, especially right now, as you know, I don't know if you guys felt this, right? But there has been, the real estate market's not the same.
Oh, I know.
Right.
I am real estate adjacent. I am hyper aware.
So right now we're being a little more conservative.
Right.
Where it's just like, hey, we need to make sure everything is good.
Right.
So with that being said, the conservative investor, making sure they're crossing every T, dotting every I, would be 10 plus years.
And again, I would say I would have it on my radar.
Right.
If it's 13, I wouldn't replace it, but I would be prepared to have a conversation to like lose some, close the gap because the buyer could have issues. Right. The issue is that we underwrite both the property and we underwrite the buyer. So we get calls all the time about, oh no, the buyer has a prior $80,000 water claim and a pit bull, and the roof is this, plus the hot water heater age is this. Right. Hot water heater, that's one that hot water heaters are relatively inexpensive. 14 years, that's the age. Anything over 14, if I'm doing my numbers, I would plan on, if it comes up, replacing that. Not every single carrier has that, but enough of them do. That, again, I would encourage, hey, buyer, get your quotes now. Get your quotes when we get it. See what they come back with. And I would be prepared to, if they come back and say, I need a new hot water heater, I would have budgeted that would be probably something I would need to pay for.
Luckily, hot water heaters aren't that expensive.
Right. And that's one that usually in this market, last year or 2 years ago, we were like you gotta, like, no sellers were doing anything. It was like, get out of here. I'm going to go to the cash buyer. That's not,
Correct. Yep.
But now it's a little different.
And
so hot water heaters are something that we're seeing very common. They're being replaced. Another thing, if you don't have the time to do it and it is a deal that the buyer really wants the house, you really want to sell them the house, there's no time to get the roof done before, you can close with one of those really expensive insurance policies for an older roof. Some of them will have that 90-day period, and they can replace the roof at some point and rewrite the policy.
Oh, okay.
So we do a couple of those for our,
That makes
we're
sense.
not trying to volunteer to do twice the amount of work, and pay back and do that stuff.
Yeah,
but for our VIP referral partners, we have a handful of those that we do every single month, because everybody wants the deal to work, to fit together. The only problem is the insurance. And if that just means we have to write the policy twice and they have to pay more for a short period of time, that's a deal that can still stick together and can still close.
That makes sense. So roof,
Mm-hmm.
15 years or more.
That's going to be an issue. And I would still take the same approach. I would budget to do it. Yeah.
Okay.
And I would try and get enough time because sometimes you're going to get somebody who's going to get an actual cash value policy anyway.
Right.
You don't know what that end buyer's priorities are going to be. They may not be able to afford the full blown policy, even if they wanted that,
Right.
So I would let them get their quotes, see if they have any issues.
And we'll figure it out later.
Yeah.
Okay.
Now, Citizens Property Insurance, they've changed. They will do, they require 5 years of useful life regardless of the roof age. My agency does not write new business with Citizens. We have a book.
I heard even Citizens is getting.
That's why we don't. I mean, it's like an it's unsustainable for our business model.
I was just Citizens will do it.
Oh man. So here's what happened. We were like, no. For 7 years, I think we wrote 2 policies with Citizens.
Okay.
Then last year, 10 insurance companies went out of business, and some of them just did not fit anywhere else.
Yeah.
And so through June of last year, I think we had written 50. And
with Citizens?
50 policies with Citizens. And then in July, we wrote several hundred.
Wow.
Yes. And we were like, okay, but we're still going to not have this in our business model. This is just because of all the cancellations. Right. And then I had this moment, and look, sometimes I get it wrong.
Yeah.
Okay.
It is what it is.
But you got to try and be my team is very comfortable now with knowing this is how we operate. We try. If it doesn't work, we go back, Yeah. So when it got so hard, I was like, listen, Citizens is the insurer of last resort. Look around. We are here. We are in the last resort mode. So we need to buckle up, Buttercup, and get good at writing Citizens because our clients need us. We did that for about 60 days. I pulled a report. I was like, holy crap, Citizens is our top carrier. We're writing the most business with Citizens. We track in our agency we call it post-bind activity. You write a policy, and then after you write the policy, what comes up? How many other things do you have to do? And we're usually about 20% of the policies we write have some type of post-bind activity. Maybe that's we need to copy the lease. Maybe that's they did the inspection and there are tree limbs touching it. They need to cut them back, things like that. For Citizens, we had 4 post-bind activities per 1 policy that we wrote.
No way.
I was like, why have I lost my entire agency support team? I've hired 2 additional people and we're behind. What is going on? And I was like, nope, no more. And so we took a week and we phased out the quotes that we had. We finalized, and I wrote, pre-scripted for the team. It's not sustainable for our business model. Here's the website where you can go to find somebody else. And it's been a very good decision for us. I feel bad. You want to help, but
no, it's true.
Yeah. Now, the other thing you have to be careful about, if you do go the Citizens route, if that's something that fits for a specific buyer, if they don't have enough money to pay their claims, all these companies last year that went out of business found themselves in that situation, they will assess the Citizens policyholders up to 40-something% of their premium at the end of the policy period. So that's something you really want to be aware of.
Right. That's crazy.
I know. It's wild. It's wild.
Yeah,
if you could see, we could do a whole other podcast on the entrepreneurial side of how many times we've pivoted.
Yeah.
I mean, it's insane. When I think of when we started in my original business plan, I thought I was going to write a little home auto life insurance like I had been doing. And I will say, I am grateful for the fact that in a hard insurance market, we do get to help more people.
Right.
There are more people that call our office that are like, this is what's happening to me. Can you help me get new coverage? And it's it feels a lot more like helping than selling.
Right.
And that's how we're wired. So that's a little bit of a silver lining. I know it's a reach. This is rotten. It's a dumpster fire. It's tough for a lot of people. So I don't want to be insensitive to that. But it does give us, as a business owner and as creating strategy, it gives us an opportunity to add value in a way that we couldn't if everything was easy.
No, it's true, because like, my line of business is, the wholesale world, right? And, it's weird because going back to the insensitive versus helping, right? Like I can align with that, because like in a down market, in a bad market, when you're helping more people, you're getting more opportunity, right? And so as a wholesaler, sometimes, and I'm not going to name any names, but like I have certain salespeople that like they want bad.
Oh,
you know what I mean? Not in a negative way.
There's a famous quote about never waste a perfectly good tragedy or something like that.
Right, but it's just like,
or crisis. Never waste a good crisis.
And everybody can get top dollar for their house. That's not good for wholesalers. You know what I mean? Like the wholesaler's like, hey, I can offer you a quick.
You can't sell your house. Your roof's too old, and you can't afford to replace it. Opportunity,
correct. And so it's like,
I'm surprised I don't hear more about that from our wholesaler clients, because I would think that would be a big.
I think that the challenge for us as wholesalers is that, or for me in my business, I can't speak for other wholesalers, but when this whole thing happened, the whole market slowed up. Everybody expected a huge wave of motivated people that are like, hey, I need to sell my house. And that hasn't happened. Right. It's just been.
That's your real angle with this insurance. You're like, is that going to be the thing?
Well,
that's going to force them to sell?
Right. Like, what's going on?
You're saying they can't afford their insurance. You're saying, are there any zip codes where they really can't afford their insurance?
Where can't they? Here's my card in case you need it now. But that is always right. Like, and I can kind of envision, because I'm not going through that, where I expected more distress in the real estate marketplace than is actually happening.
Well, I think a lot of people, where are they going to go?
That's
it's expensive everywhere. And that's, even people, when I hire people, it's one of those things that's in the back of my head. I'm like, oh gosh, you can't ask, do you own your home?
Right.
Right. But it is like a little secret. Like when I know that they have secure housing, I'm like, oh, I'm so glad for that for them, because we've lost people that have moved away. Because they can't afford their rent.
Correct.
And that's that's a sad thing. And
no, I have one of my guys is leaving. Well, he already left, moving to Texas. And he's sending
They've got their own insurance problems, by the way.
Oh, I'm sure. But he's sending me these houses.
In Texas?
In Texas. And he's just like, dude, look at this freaking $250,000 house. It's like 5 bedrooms. 3 baths, acre of land. It's got a pool, and it's like $250,000. Like, you can't find that in Jacksonville.
So are you
anymore.
Moving to Texas?
No.
Are you flipping houses in Texas?
I'm not. No. But it's just crazy, right? Like, dude, $250,000 somewhere else, you can find something else.
Yeah.
Right. And it's like in Jacksonville, there's only certain areas where, like, hey, if you want to pay under $1,000 in rent, I'm gonna move somewhere else.
What's funny, I think about like in the time period, and by the way, I was talking to your wife. I remembered again that we're from the same hometown, which is so funny, right? We're both from Bradenton.
True. I forgot about that.
I was like, I just got back from Anna Maria Island. She's like, I'm from there, and I'm like, that's right.
That's right.
Yeah. So when I was growing up, and like around the time period when I graduated, it was a very realistic thing that if you were graduating from high school and you were going to get like 18 years old, get a job, if you were working a restaurant, bartending, front desk at some place, you could afford to get your own apartment.
Right.
Like you could get a roommate and you could afford to live on your own. Yeah. And now that's not the case. You're seeing people stay well into their 20s.
It's crazy.
In their home of origin, in their family home, because it is a challenge.
It's crazy because everybody's like, interest rates went crazy, skyrocket, and everybody uses the argument of, oh, well, in the 80s, interest rates were here and blah, 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 blah. But if you look at the freaking average home price,
right, a combination of the two of those, and then throw in the insurance
but
yeah,
home prices were at
$5.
80 grand, like
Yeah.
top of the top of the top. It's 80 grand, the average home price. And so I get the argument that interest rates are low or interest
high,
rates
but not
are
so
high.
yeah.
But the average home in Jacksonville just hit almost 400 grand.
That's
crazy.
Blows my mind.
I was reading this News for Jacks article yesterday, and it was saying how the Jacksonville market is overpriced by about 40%.
Oh, really?
Yeah.
Wow.
And the problem, and because of the lack of inventory, prices aren't going to come down.
Yeah, there's still, I mean, supply and demand. Like the competition is in there.
Exactly.
It applies to all markets.
And so, where are these people going to go? It's like, hey, if I do sell my house, my freaking mortgage is, $1,200. I sell my house. Yeah, I do capture my equity, but now I'm paying $2,800 somewhere else. Like, I don't want to do that. But I digress.
It's nice for people that are in like a life transition. Like if they need that bigger house,
correct.
It is nice for them to be able to, to take that and leverage that equity.
100%,
there are people that it makes sense for. And, I do think that when Rich and I bought our first house, I don't think that, what are the rates now? What are they? What are mortgage rates? What are people saying?
Almost 7, I would say.
I do think that was about what they were when we bought our first house. But like you said, home prices were way lower. Right. But we did, and we were upside down by like $100 grand in that house. This is an interesting real estate little story. First house we bought, 2007. 2007. Okay. We buy this house. It's our first house. My husband is a mortgage loan officer, and many people of our age bought their first houses around this time. Many of them were like tap out and doing short sales and foreclosures. And it was very much, it's kind of like the roof thing, if you will.
Yep.
And my husband was like, never. Like, I am a mortgage loan officer. I signed a piece of paper that promised that I was going to pay this back. I'm going to pay this back. Not an option. Not an option. I'm keeping this house. We can pay this payment, keep this.
Yeah.
So we did. We finally got to do a refinance under HARP, that program that came out for people that were upside down to at least be able to refinance at the new low interest rate. So that worked well for us. But 10 years we were upside down in that house. On paper, it looked like a dog investment. I got pregnant with the twins and had started my business and needed a bigger house. That house is basically like 2.5 bedrooms. We were already like feeling like we needed more space. So we were forced to become landlords on that because we were upside down. We were like stretched real thin to buy our next house so we could have the space. Fast forward, now that house is like more than half paid off. It's got hundreds of thousands of dollars of equity in it. Even with my more expensive insurance that we have now, it's one of our best cash flowing investment properties. So it's like, was it a good purchase? Depends on when you ask.
Correct.
For 10 years, you would have said no. You give me a parade 100%. Now. That thing is for my retirement. You just got to wait. If you can wait. Now, not everybody can. And we were really fortunate that things worked out.
That's huge.
But boy, I remember sitting down.
Yeah.
You picture it. I convinced my husband, I'm going to start an insurance agency. It's cool. I've been doing this already for 7 years. Everything's going to be good. I'm going to make no money for a couple of years, but it's cool. We're going to have all these renewals. It's going to be great. It's going to be great. And he's like, okay. So we start the business, and then 6 months into it, I haven't gotten a single renewal, and I find out I'm pregnant with twins.
Oh my gosh.
And we have to buy a new house. We have to move. We have to figure out how to be landlords. We have to like do all of these that was a crazy
that was
time.
The big thing with my wife when we found out we were pregnant is, are we having twins?
Yeah.
That's insane.
Oh, sorry. Bonus baby, man. That's where it's at.
and it's almost like you know it's gonna be a headache, but deep down you're like, this is a blessing because we get 2 at once.
Oh yeah, it's the best. It's the jackpot.
Yeah.
It's the jackpot.
It's like, is it really that bad?
I'm a big champion of congratulating twin parents and celebrating with them, because so many people would just be like, I feel so bad for you. Right. I'm like, don't feel bad for me. I have a bonus baby.
Yes.
I make babies 2 at once. What is your superpower? And I'll tell you what, this hard market, starting a business and getting pregnant with twins 6 months in and having to like figure all that out was good training for this.
Yeah.
Like hard things always translate. They always translate.
Yeah. No, that's awesome. So so we talked about some positives, right? Positives are, there's a lot of things that are going into place.
Yes. A lot of good legislation has passed. big measures to course correct and fix.
Sometimes legislation is good, right? Like more involvement. I know, like in the wholesale industry, it's a wild west. There's no you don't have to be, like, to be a realtor, you got to get licensed. There's all these rules and all this stuff, right? Wholesalers are like, no rules, no nothing, blah 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 blah. But then when there's no rules, when nothing happens, it gets messed up for everyone. And then you're like, there needs to be rules. There needs to be, right?
Yeah.
And so I feel like that's some of the pros that we're seeing. Correct me if I'm wrong.
No, absolutely. So, an example and why I'm very, very optimistic about this. If you take it back to when I was very first getting into the industry, everything, all a buzz about sinkholes. And it was this, people couldn't get insurance because of sinkholes. And the reason was that the policy contract language, again, short version, because I can tend to go down a rabbit hole on these things. But the short version is that the policy contract language at the time put the burden on the insurance company to prove that there wasn't a sinkhole. So you have this same Cobra farmers going around telling people, hey, we can get the insurance company to pay you out on a sinkhole claim because a geologist will come out, and if they can't disprove the sinkhole. So the insurance companies are like we're losing money, we're going out of business, we're leaving the state, blah, blah. So at a legislative level, at the system level, they changed the policy contract language. Now it's no longer called sinkhole. It's called Florida Catastrophic Ground Collapse Coverage. There are a couple of very common sense requirements that they have to fulfill. Like you have to be able to see it with your naked eye,
which you have to fill out every time you.
Yes, you know that form.
Is there ever
you
a
know
sinkhole?
that
Yes
form.
or no?
You know? And then they define like a sinkhole 6 different ways: cracking, shifting, or bulging of a foundation wall or roof. Yeah, all that.
Yes.
And
I'm like,
the property has to be damaged.
Like,
all of that is because they're closing that loophole.
Right.
And when's the last time you've heard that somebody hasn't been able to get insurance because of a sinkhole?
Oh, it's crazy.
A beautiful example. It fixed the problem.
We expanded into the Tampa market because we don't deal with this.
And then you were like, oh, sinkholes.
Yeah, we don't deal with this in Jacksonville, right? Luckily, I haven't heard of the sinkhole in all the deals I've done in Jacksonville. But when we went into Tampa, all those markets, the surrounding Tampa markets, next thing you know, we're like, we're going under contract on a house. We were selling to hedge funds down there, and they're like, hey, our requirements in Tampa is sinkhole, yes or no. I'm like, what do you mean? Talking to sellers, there's a ton of sinkholes. It's crazy.
Well, and the thing is, was it a sinkhole or a sinkhole? Like a real one? Or did they put a claim in, get a total loss paid on their house because they couldn't prove that there wasn't a sinkhole? And now all these years later, what are you to do?
And so the craziest thing was, that's when I got too exposed to how normal it was that there were sinkholes. And like retail listings, sinkhole remediation, all this. And it was just like, dude, it's like nothing down there, that there's sinkholes everywhere. And, to your point, insurance companies have figured out a way to make it work.
And so I'm optimistic that we're on that track. So we got to buckle in. People need to realize that and budget for it. Like everything's going up. Your insurance is going to go up. There's not going to be a magic wand where you call and get a quote from another carrier and it's going to be back to what you were paying last year. And there's a risk in moving your policy. You're getting a new policy with a carrier that probably doesn't want your business. And they're going to go out and inspect it. And they're going to look for reasons to not write it. So if you're on that, I don't want to call myself out. I don't want any of my own carrier, but I have 3 properties right now that for a variety of reasons, I'm kind of flying under the radar on, I don't want to get flagged for those things. And it added up to thousands and thousands of dollars, but I decided to stay and not run the risk of moving it because I don't want to prematurely have to make repairs in order to be insured. Because I'm in a fine condition right now. And I'll sign all the mediation agreements. I will totally go to arbitration.
Too.
I am not. Give me the premium discount.
I remember seeing that and I was like, this is freaking insane that this is happening, but this is good.
Yeah.
Right? Because
it really is. Hey, options are good.
I got the quote
options
for
are always good.
$4,500 for a 6-month thing. And I'm like, holy crap. Or I can get this one that's $1,800. But I have to sign that I'm not going to sue them. I'm like, dude, let's do it. Right?
Yeah. And you have to think, look, you probably aren't going to have a claim at all.
Correct.
And then if you do, first of all, you have to have a claim. Second of all, you have to have a dispute about the claim.
Right.
And I am telling you, it is not reasonable clients that, in my experience with my agency, again, not all of them. We do occasionally have situations where claims are not handled perfectly.
Yeah.
There are people are in every business and in every role, but the vast majority of our clients have very positive. I just got, I'll send it to you or post in the comments. We just got like a beautiful Google review. Actually, I guess it's been a couple months, but she put specifically about, I was just floored with how wonderful my claims experience was. I work in the medical field and I was expecting this to be a difficult thing with the insurance. And it was, everything was great. Everybody that I talked to was wonderful. Da, da, da. And I was like, you.
Yeah.
Yes, that is what we're used to.
Right.
So it's especially painful when you see this picture being painted about these insurance companies that are needing to be taken to court and forced to pay things, where I'm over here and I'm like, that people are going out of business. People are losing their jobs because of this, and everybody's paying higher premiums because of this broken system. Right. So,
well, I do feel like there was a wave of like, oh, I can get you so much money from your insurance company.
Oh yeah. And it was the last year to file claims for Irma.
Yeah.
And it was 2020. Yeah. And everybody was home.
Right.
And everybody was, again, geographically located to where it was so efficient to go door to door to door to door to door, and everybody's home to answer that door knocking route.
Because I know some public adjusters that crushed it. Just crushed it. And now we're all paying for it.
And if you want to put all their names in the comment section, everybody can thank them.
Now we're all paying
I would like to put their personal phone numbers, and we can just like forward our phones when somebody calls and they're like, oh, why did my rate go up? We can say, hold please, and forward them.
Did you know that there is a prank call service that you can give them someone's phone number
and they'll prank call?
They will keep like just harassing them. I don't know what the fee is, but I just found out about the service.
I should learn about that. We were just talking about, one thing I am so grateful. I have the most wonderful team. We have such a good vibe right now at my office. I'm incredibly grateful. One thing they don't do, nobody does any pranks.
Yeah.
And when I was an employee, when I was a coworker, I was doing the pranks, man. Yeah. We used to do this when you mentioned the phone calls. We would, this is back, you had like an actual phone, dating myself, and we would change people's speed dial, and we would change, like, you're trying to call auto underwriting, and you'd hit it, and they would be like, thank you for calling the North Pole. This is the teddy bear warehouse. What can I do? Whatever.
Awesome. Yes.
Your coworker would be like, this is who?
Yes.
This is what?
Oh, that's so
It's like
great.
My classic prank move. Change the speed dials.
Oh, that's so good. So I don't want to take up too much of your time, but what do you look forward to the most out of this?
Out of this conversation, or out of this season?
Out of this season of what we're going through with insurance.
So, I am talking in my vacuum from my own, So for me, I have realized that I'm in a very unique position. I'm younger than your typical insurance agency owner. I'm in a different phase of my career. And this has been an opportunity for us. When all of these people are losing coverage and they're looking for someone, it's very sad for a lot of my colleagues because they just can't keep up. Yeah. But it's been an opportunity for us to really gain a lot of market share. And so we are grateful that we're growing like crazy. We were just looking this morning, our team is almost 5 times as big as we were going into the pandemic.
Wow.
Yeah, I mean, it's wonderful. We've got great people on the team, and we've been able to, over the last year especially, really get people that want to do things right, want to take care of clients. It's been very fulfilling and rewarding to see them succeed. So in this life phase, I'm motivated by providing jobs, creating career opportunities, giving back, helping people. He asked, I think he was going to put the thing about our charity program, being able to do that kind of stuff that comes along with growing the business. It is very rewarding for me. And I will say that this work that we've been doing with trying to help these legislative efforts, we've been doing it for years. And a couple years ago, it really felt like no one knew, no one understood. I'm like in a dark room screaming at the top of my lungs, like fire, fire, crisis, crisis. And it hadn't gotten bad enough yet. but we stuck to it. We kept doing it. We kept doing it. And now my team is so proud to tell our clients, do you follow Whitney on social media? Do you know we've been working on this to try and fix this for you for years?
Wow.
And I'm super proud of that. And I didn't know when I started it how valuable it was to me. I'm going to be honest. When I started it, it really felt like a kind of a almost like an insurance. Like, I better do this. Like, if I don't do this and someone else does do this for my clients, then they're more worthy of their business than me. You know, I didn't want to get caught not doing it. And it's just been very valuable. It's also given us a great opportunity to show our partnership with our carrier partners. Because they see us out there as a solution-oriented partner that gets it, that wants to try and help make a win-win for everybody. And that is more, that's currency.
Right.
That is currency. Being able to call up and be like, I really need this underwriting exception. This makes human sense. You know us. And we get the yes.
100%.
And that helps our livelihood.
You scratch my back, I scratch yours. Yeah, that's awesome.
So that's the most positive stuff that's going on right now.
So I do want to, before we cut out, I do see we have some questions.
Someone nailed it.
Someone says
someone got the someone
and
in someone. Somebody got the someone in someone.
So my man Remy, what's up, Remy? Nicholas, Alexis. Remy says Golden Nuggets. You already know.
Oh, thank you.
Neil Brown, who's so far away.
I know. Is he? What are you texting from like the next room? Where is he?
How much do previous claims on properties affect a new owner?
It depends on the carrier. And the big thing is they're going to want to know what was the claim and was it fixed? So if you have a situation where a property had pipes that leaked, was the home replumbed? That's what they're going to want to know. Or if there was a roof that leaked, was the roof replaced? A really sad thing that we're seeing happening pretty frequently is a lot of those roofs that were replaced in that knockety knock, or let me rephrase that, claims that were paid for roofs and that knockety knock. A lot of those people took the money and sold their houses. So now people are trying to buy this house and they may be 2 owners later. And they're like, what? The house is like, there's a claim paid for a roof on that house, but that roof is 14 years old because, so that's going to be a problem. But if the repairs have been mitigated on the property, there are some carriers that only do claims on the individual and not on the property. But you have to make sure that you meet all the other underwriting guidelines. You have to make sure that your agent works with those carriers. We solve that problem all of the time. That's something that comes up. But we do want to make sure that it's not a condition that's going to be recurring.
Right. Oh, that makes sense. Hey, can you scroll up a little bit? Do we have any other questions? Mike, if you can scroll up. Citizens is going up too. That's the boat I'm in right now. Roof too old to shop around. Yeah, that makes sense. Okay, awesome. Well, I think we answered some questions, and I appreciate you doing this.
This is like happy hour for me.
Yeah, I love it. I love it. But anybody who's watching, thank you so much for tuning in. I know this is a big topic right now in the state of Florida. And we brought on one of the experts to talk about this. So thank you so much for doing this.
You're very welcome.
How can people find out more about you?
Yes.
Learn more about your company? Who do they reach out to?
My daughter pointing to herself. Reach out.
Yes.
Here, you can come over and say hi at this very end part, Scarlett. We have my daughter, the intern here, my 10-year-old. You can wave to everybody. Okay. So our website is RicciInsuranceGroup.com. You can follow us Ricci Insurance Group or Ricci Insurance Group on all social media. Okay, that's enough. Okay. Careful of the cords. On all social media. LinkedIn is really where I do a lot. And stand by, because I think I hinted at this to you. But we have decided that it's not enough for us to say, follow Whitney on social, because maybe they'll catch this. Maybe they'll see that we did this. Maybe the algorithm won't show them that we did this. Maybe we post it once and then the week they're on vacation or whatever. So we are launching a podcast too. It's going to be called the Ricci Report.
Oh, that's awesome.
Scarlett's going to do a little bit of it with me too. We're going to do some stuff that tell me like I'm 10. and explain it on a 10-year-old level. She's giving out business cards. She's an excellent hype woman.
That's awesome.
So soon, in the next 30 days or so, you'll be able to go on YouTube and wherever you listen to your podcast and subscribe. And that's where we're going to do the more current legislative updates.
Yeah.
I'm going to try and keep them brief, but I want to be able to go into like, here's the insurer accountability bill that just passed. This is what this means. Here's what this My Safe Florida Home means. Some people really want to hear all of that. They love to flip that on their way to work. And so we don't want to, and not everybody does. So we also don't want to pump out our social media all the time and have people like unsubscribe to us there. So it'll give people a little bit more of a opportunity to do that. And I did want to say one other thing. We were talking before we went live about our charity referral program.
Yes.
So we do a really cool thing. We have every quarter a different charity that's nominated by one of our clients or referral partners, and they fill out a thing. You'll see the one, Debbie Tufts from actually, and Kurt, it's his mother-in-law, Kurt and Stephanie Stein. Yeah. The world is so small, but she's a wonderful client and supporter of our agency. And she's very passionate about this specific nonprofit. It's To Titmice Foundation, and they support local families who have a survivor going through breast cancer. Okay. And this specific foundation has a vodka line. So I did say in the beginning that I was going to do a giveaway of one of their bottles of vodka to whoever we were going to do like random, whoever asked the best question or something. Okay. We were going I'm not doing random. Nicholas Alexis, who did the sirens and the ding 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 and got the someone and someone, man. He's getting the vodka.
Yo, Nicholas Alexis,
you're getting a bottle of vodka from us, from Ricci Insurance Group, and
thank
to help
Morgan
spread. You're welcome, Morgan and Morgan.
Oh, that's awesome.
So we'll reach out to you to get you that. But we want to spread awareness about the work that they do in the community. Yeah. And also the part of it is, we want to give back financially. The people, when you build your whole business from referrals, it becomes very important to me to support what's important to my people.
I agree.
So this is important to Debbie. She wrote a beautiful nomination for them. We're doing a video with her later this week that we're going to post on social about them. Yeah. And also with the president of the foundation. So we'll be learning more about them. And all of the new clients that we get that come from referrals, we increase the amount of the donation that we make each quarter to that charity.
Oh, no way.
And so we're getting close to $40,000 that we've donated to local nonprofits, or I should rephrase that, that has been donated or raised, because sometimes we get a little bit of a match, or we'll get a carrier to throw in or kind of thing. So.
Oh, that's awesome. Mm-hmm. What is the name of the vodka?
To Titmice Vodka.
That's the name of the vodka.
That's And then To Titmice Foundation is their nonprofit arm. Oh, that's awesome. You can buy it at Total Wine.
Wow, that's cool.
Insurance and selling vodka.
That's awesome. Well, we have Whitney's information posted down
below.
Yeah,
thank you.
If you guys have any questions, reach out to her. I'm definitely looking forward to the Ricci report.
Thank you.
That sounds awesome.
Thank you.
Congrats to everything you have going on.
Appreciate it. Thank you for having me. This is fun.
Yeah, no, love having you on. Thank you so much for being here. And for everybody who tuned in late, or maybe you didn't get to watch all of this, I promise you, if you are in Florida, you need to watch this episode. So you can either rewatch this on our YouTube channel, or it'll be on my Facebook. And thanks everybody for tuning in. I'm G, and we are out.